Evening, everyone. It's Ed, NotionalEd and Discord World. It is Sunday evening, March 23rd, and I am jumping back into the video recording of my weekly economic outlook, a little bit of chart review, and some commentary as well, if you guys know me, for those that do. So let's get into it real quick. I want to zip right into the um, upcoming economic reports for the week. I have two stars just for the United States. I have been glancing more and more at world activity lately, but I'm going to keep it simple tonight and probably in these videos as well, and just keep it to the United States and the two star. We can go to the one star. For those that have seen this before, it's a lot more activity, a lot more to zoom through. Again, these highlighted notes, please remember, are the three-star reports of the week. So we're just going to cut back on that a little bit and drop it to the two-star reports. And we'll take it from there. So we don't have a highly important number until Wednesday at 7:30 a.m. Central. When we get the durable goods orders month over month, was at 3.1%, forecast at negative 1.2. We've had a definite slowing in the perception of the economy of late, and those numbers have been showing up in the economic reports, which is fed into our interest rate forecasting tools. We'll get into that in a little bit and see what the Fed might be considering according to what the market expects. On Thursday, we have the GDP growth rate, quarter over quarter final was 3.1. Market's looking for a 2.3. We'll just take a quick glance at some depth there and see that looks like we have a little trending down of what GDP has been doing lately from pretty much the third quarter of 2023, where we had a 4.4% growth rate. We've been trending down 3.1 for the third quarter of 2024, and then boom, we dropped down to 2.3 is what's being projected. And that'll come out on Thursday. This will probably be an interest rate mover as well as Friday's core PCE, which is the Fed's preferred inflation gauge. They're forecasting a 0.4%, market analyst that is, following a 0.3% increase prior month in February. Then we have some personal income numbers. It was scorching hot last month at up 0.9. Now it's projected to be up 0.3. And spending, which was down 0.2%, is expected to be up 0.5%. There was a little front running on tariffs here, so it's created some choppiness. So we had this big pop here and then a drop off here when that came. And there's been a little bit of consumer confidence decline. We've seen that number a lot of declining consumer confidence. That feeds into the spending number. And again, income looks like it's softening a little. We'll just dig into that for a second. It's been pretty hot lately too, and that's a good sign that inflation could potentially cool a bit. But of course, we have a pending tariff situation on planet Earth, so we'll see what that does to costs and see what actually gets implemented. In the meantime, it's creating a tremendous amount of uncertainty, and that's been feeding into this VIX over here. You can see it's at 19.28. We briefly visited the 30 area. In the last couple of weeks, we've backed off to 19.28, still a relatively high elevated area and higher than the long-term average, which is about 18-ish. And then see what else we have that's going into next week. We're going to stop there. So there's some Fed speak. You can see that consumer confidence, consumer sentiment number here is expected to decline on Friday. Not a highlighted for a 3-star, but it's certainly a 2-star. These are all important numbers on Friday. These inflation numbers, income and spending, and this sentiment number, I think, are all important. We have Fed speak, quite a bit of Fed speak. We have one here, 2 here on Monday, 1, 2 on Tuesday. On Wednesday, we have 2. And Thursday, we have 1. Friday, we have 2. So that is a lot of Fed talk. We will see what comes from that. And that is pretty much the review. I'm going to go through the economic reports. Let's take a quick look at what rates have done in the month of March. We started the month on the 1 month at 4.38. We closed Friday at 4.36, essentially unchanged. We'll go out to 3 months, 435, 33, essentially unchanged, and even the 1 year 406 to 404, just down a little tad across the board, a couple of basis points. Bumping out to 10 years, it went from 416 to 425, so we actually had an increase in the 10 year, and we also had one in the 20, which went from 449 to 460, and the 30 year, 445 to 459, about 15, 16 basis points. Not inconsiderate. Those are modestly large increases in rates, especially at a time when the expectation for rate cuts this year has actually risen. We'll get into that in just a second. But I want to point out that these rates are down a little to stable, and then these rates are starting to trend higher than they were at the beginning of the month. So that actually short end went down, long end up. So the yield curve is actually continuing to uninvert. We can look at the 2 year, 396, 394. That was down a little, and you can see that's below the 10 year. So the 3 year, the 2 year and the 10 year uninverted. That's another very popular inversion that a lot of people like to look at. I also tend to look at these short-term rates and how they compare to the yield curve, and they're also still inverted a little at 436 versus the 10 year at 425. So you can see there's a little bit of distortion still in this market versus a normal yield curve, which would start low and trend higher. It has like almost an exponential trend to it, or a sloping from lower left to upper right. Right now we have a rate curve that goes like this, and we have a dip and then a rise back up, where longer term rates are generally a little bit longer in the 20 and 30 year than the very short term. That's how rates are looking there. Let's go in and take a quick look at the CME Group Fed tool, and let's see what the market's expecting. So at the May meeting on May 7th, there is an 86.4% chance that rates will not be cut. So let's just pop out again a couple months and look at June. In June, that's July, excuse me. In June, we have a 65% chance they will get cut by a quarter. And then for July, there's a highest probability that it will be cut by a quarter by then, or maybe another 0.25. There's a 30, almost 4% chance a second cut would occur by July. We'll bump out to December and see that there's a 33% chance there'll be 0.75% cut. So that is what the market has the highest probability odds right now, is by the end of December, the Fed's rate cut will be somewhere in the neighborhood of 0.75%, possibly even 19% chance we'll have a full percentage point cut from the current 4.25. Again, the highest odds is at 33.4 for 0.75 cut, and about a 28% chance of half a percent or 50 basis point cut by then. We can pop out to the end of 2026 and see that the market basically expects about a 25% chance we'll be down to 3.25 to 3.5. So you can kind of extrapolate. If you look at December and you see 3.5 is the most likely scenario for rate cuts, and we go all the way out, remember that 3.5, we'll go all the way out to the end of 2026. And you can see we're only going to have a 25% chance we get cut another 0.25 or 0.25% in the whole year of 2026. So we can pretty much think we're going to have a percentage point cut between now and the end of December 2026. That's about a 25 or 6% chance. And again, it looks like most of the cut will 0.75% will come this calendar year, with only a quarter the following year. See what else we can look at. Let's get the CNN fear index, fear and greed index. We're still at extreme fear. I like to glance through this and the components that it makes up. Find it handy personally. Okay, that's it for that. Let's go into some charts. We'll get into that real quickly. and get through that. Let's look at SPY first. And on SPY, we have, so this is the 50 moving average. I have a daily chart set, and this is the green is the 200 moving average. These are expected ranges for the week. So we have an upward expected range of 573.89 and a lower of 554.07. We close at 563.98, and we're actually trading up at about 567.95 in the pre-market here on Sunday evening. So we are trending toward this 573.84 number, and we'll just see what happens. The market is rushed down in a pretty short period of time. We have gone down from intraday high to intraday low about, if you look at the number up here, when I put this line out, you'll see that we are about 10.36, it looks like, from intraday high to low on SPY. And that is the high of February 19th and the low of March 13th, about a 10.4% drop, which is a correction. Not a gigantic one, but it is a pullback in what has been a very, very sturdy market up until this point. So that's where we are. The market came down, we bounced, we kind of went up to near the 200 moving average, also happens to be near the expected range. Didn't quite get there, and we sold off and we're trading in the middle of this digestive period. So very telling as to whether we hold this low or we climb back above the expected range, possibly this week or next, or who knows when, and then therefore above this 200, this green 200 moving average. Here's the 50 above. That'll promise to be some resistance, I would imagine. And we'll see. This is a Bollinger Band without the middle number. I just use that. You can see how the price rode that and then broke away. You can see the TTM squeeze reflects that. That's a Bollinger Band type visual here. So that's it for SPY. SPY is below the 50, below the 200. These are traditionally very bearish. In fact, if you look at this price action coming down, breaking the 200, going back up, testing it and breaking it away, it's kind of critical to get back above this 200 moving average to preserve this bull market and leave it intact. Because right now we're in correction zone. This actually looks like if this thing breaks here, we're going to take another leg down and go, well, we'll see where. This gold line here actually goes back to the October 26, 2023 cyclical low. We'll switch to monthly real quick and take a real quick look at that. And that starts, apologies, that is not the cyclical. Yes, here's the gold line. There's October 2023, the bottom, and then I drew that through line in there. And that's where we have been climbing. That's where we have broken. And let's go back to the daily before I confuse myself again. And okay, so just a real quick refresher. We've come down, we bounced, we're below the 200. This is serious overhead resistance with this trend line from the October 2023 lows and the 50 moving average above that. A lot of overhead resistance. We'll see how it goes. Here's RSI. It's come down, bottomed out here with the low on March 13th and has started to climb back up. Not quite in bullish territory, but it's bounced way off the low. So there's that for whatever reason. Okay, let's see. Let's go take a quick look at the let's look at the Qs, just to get an equal look at a different market. So here there's Qs, which is the NASDAQ 100. Pretty similar look. We came down, we had a bigger correction. Let's see about what the high to low correction was. About a 13.75, almost a 14% correction there. And it has again bounced, has that S&P or SPY look. It's trending sideways. Here's the lower expected range, 470.51, upper at 491.17. The 200 moving average is above, 50 is above that. And all this has a very, very similar look to it with the same dynamic of a lot of overhead resistance up here at the 200 moving average. This spot here is the January low. And that's going to prove to be a little bit of resistance, I would imagine, as well. It was a low in this range, broke out and then provided support. That probably will be a little bit of resistance. We'll see. And it also kind of somewhat declines with this, coincides with its declining 50 moving average. Okay, let's go out and look at some popular stocks just real quick. Here is Apple. Here is the expected range of Apple for the week. I have actually some alerts that I've started putting out on these things. Wanted to keep those other charts a little cleaner, so I left the alerts off. Upper end 224.16, lower end 212.38. Here's the moving average up here at about moving average about 228 on the 200 and 231 or so, 232 on the declining 50. These will be overhead resistance. I'll leave it at that. Let's look at Tesla, which has been pretty slaughtered. And it's been in decline mode since January 17th. In fact, it hit a December peak. Back up a little, 448 Tesla, and then low is somewhere around here. And that is a big decline that is kind of hidden by this. Let's see if I can catch that number here. Here, I'll redraw it. Here, and that was a 55.58% decline from mid-December, which was the market peak as well, by the way, to Friday, March 11th, 55% decline. We'll see what happens there. No promises, no guarantees for anything. You can see there's a lot of support down here in the lower twos. We'll see what happens there. It kind of went there, and it's holding. The 200 moving average is above it. 248.17. It's this number right here. I'm sorry, 284.17. That's the 200 moving. And 335 is the 20-day. The expected range, just take a quick look at that. We have 265.78 and 231.64. So we will see how those go this week. And quickly look at Microsoft. We'll just do the quick expected range. Expected range 399.82 right at 400, and then we have the 382.70 for the lower end. It has a similar dynamic with the 50 actually below the 200, so it's been a little softer for a little longer, but these are overhead resistance numbers. You can see the Bollinger Bands are starting to squeeze. RSI is starting to trend higher, but we'll see. Looks like Microsoft's trying to put in a bottom here. And it looks like it may have bottomed a little ahead of the market. It's been trending sideways. Here's Google. Google's expected range is 171 on the upside, 161.45 on the downside. Its 200 moving average is up here at 176, and the 50 is at 184. Google looks like it's also bottomed here. It's got a little fundamental problem. The Justice Department's looking at it, trying to sign. They're going to approve their big cybersecurity purchase. Got the company's name, but it's about a $34 to $36 billion purchase by Google of a cloud security company. And we'll see if the government allows that to go through. The government that's supposed to be for less regulation, certainly cracking down and regulating some things. Meta, we have, and Meta is actually above its 200 moving average, and which is at 573. Put it right on there. 573-ish is the 200 moving average. The 50 is up here at 653, 652.93. The expected range upside 616, on the low side 575. It too is trying to put in a bottom here. Its RSI is just bouncing along pretty low after touching very oversold, but not heading into it. And Meta has had a pretty monstrous decline also. stretch this thing down, see if we can get that number in here. Something like a 22.5% decline. So more than the market, but Meta was a superstar darling for a while. You can look at its explosive growth from 500 up to 750, which is a 50% move from September 2024 until February 2025, excuse me. So about a year and a half, it moved up 50%. Now we've had this pretty hefty correction back down. Still sitting below this prior high, so that'll be some resistance. And you can just look at these expected ranges here, and that 200 moving average. We'll see what happens with that one. Let's look at the mighty NVIDIA. Hello, NVIDIA. Let's go see where you are. There you are. So NVIDIA had a swing high of 153 back here in early January. It's come way down here. Let's see what that move is. That move is a negative 31.5% decrease. So big hefty decline. The mighty NVIDIA, and it has been on a crazy tear the last few years. So here it is, way down at $14 at the end of December of 2022. So it's had a nice explosive run up. Mega cap. We can look at the fundamental picture of NVIDIA. It is not super overpriced. In fact, this PE is a trailing PE. The forward PE is something like 28, which is not unreasonable at all for the growth rate that this company is facing or experiencing. And we'll see what DeepSeek and the lower cost computer needs of China's AI is versus the US AI, which is dominated by NVIDIA's Blackwell chip and data centers, etc. We'll see which model wins that battle. Another little point of interest, NVIDIA has 24.4 billion shares outstanding. So for every dollar move in NVIDIA, it actually has a 24 or almost $25 billion effect on the company's total market cap, which is somewhere in the upper about 6 or 7 trillion. I haven't calculated it, but 118 times 24.4 billion, whatever that is. It's roughly 265 or so, 2.65 trillion. Anyway, every dollar move, 24 billion in market cap move, and that is a huge component of the NASDAQ 100 and a large component even of the S&P. So that's why a lot of people watch NVIDIA for its powerful moves. Micron's another stock I've been toying with. Been a little bit all over the place, but it's in a choppy range. I've been doing some actual in-the-money covered calls with this. Just looking at where it is. Here's the 200 moving average up here at 104.50-ish. And the 55 moving average is at 96.6. Expected range 98.75 and lower end 90.69. It bottomed down here at about 85 or so back on March 10th, which was also a similar spot to this January and late December moves where it came down here. They've been doing a little warning. A lot of people think they're under-reporting or under-promising so that they will deliver good results. The company's been solid. It's a U.S. company, and its DRAM chips and other things are important in the world we live in today. Here's Amazon. Let's go to its dynamics. It's sitting just below its 200 moving average, which is at about 200. The 50 is up here at 218, and it bottomed here at about $189 on March 18th. It's trying to catch a bid right here. We'll see if it does. It had a lower secondary low, which with a little divergence in the RSI, which is trying to work higher. Expected range up at 202 and lower end at 190. See what happens there. And I guess I will leave it at that for now, and I will hopefully get these videos out on a weekly basis, but no guarantees. And I look forward to hearing from you guys. I will put my email address in the body of this email, along with a little description. And feel free to reach out and contact me. I am NotionalEd in the Discord world, so you can reach out to me there and ask questions if you'd like. Otherwise, I will see you guys around. Have a good week. Bye-bye.